On this particular video, I'm going to be showing you guys the modification of a strategy which has never been shown on YouTube. Yes, this strategy or this modification has never been shown anywhere on YouTube.
Never.
If you have to do research and you see this modification anywhere on YouTube, let me know and I'll take down this video. That's to show you how confident I am on what I'm saying. Good. So what is the modification about this particular strategy? Strategy is normally a popular strategy which is known as the Fibonacci strategy, but the modification which I'm going to be showing you guys today has never been shown anywhere on YouTube. So what is the Fibonacci strategy? You guys know I'm not fond of too many indicators, but when it comes to forex trading and forex indicators or one tool which is very, very effective and very applicable even in normal life scenarios is called the Fibonacci tool. So if you want to watch the detailed video which I already made on the Fibonacci tool, then click the link above to be able to watch that particular video and how you can use it in your trading. Perfect. So just to have like a recap, the Fibonacci tool is more like a trend continuation tool, right? So it's more like a trend trading tool. It helps you if the market is going up. Let's just come here. Let me quickly just show you here. If the market is going up and bouncing on higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. If the market is here at the current higher height, you wouldn't know for sure what level you should be buying this particular trade because the market might retrace again, but you wouldn't know how long the market is going to retrace before going in your intended direction. So the Fibonacci tool is going to come in to be able to help you to know what level you should be able to jump into that particular trend. The same thing will apply for a downtrend. If the market is bouncing on lower lows, lower highs, lower low, lower high, the Fibonacci tool will be able to tell you the level at which or the extent at which the market can retrace against you before continuing the original intended direction. Because whether you like it or not, that's how the forex market works. If you say at a particular level, there's no way the market will just go like a slingshot and hit your take profit. The market will breathe out and breathe in, breathe out and breathe in. And is that breathing out and breathing in, breathing out and breathing in, which the Fibonacci tool is going to be very, very effective at this point in time. So let me just quickly okay, so with that being said, that is how the Fibonacci tool works, right? And in our case, what we'll do is you instead come here and you go on your MT4 or your MT5 and you'll be pulling your Fibonacci tool from the most recent swing low to the most recent swing high. And once the price gets to your 50% level or your 38% level or your 50% level, you're going to be buying. So that is how you normally just do as a beginner or as any general for any normal forex trader, right? But we're not just beginner or any normal forex traders. We are extreme forex traders. We are pro forex traders, and I'm going to show you guys what you have to do. You won't even need to be coming here to be using. You won't even need this tool because there is already a tool that has already calculated the price levels for you. The only thing you just have to do is just to go on your chart and you just look for that level and you press buy and sell. As soon as the price gets to that level, you just buy or you sell. As easy as that. So come with me. Let me show you guys what I'm saying. Good. Let me delete this. Good. So the tool we are talking about is called investing.com Fibonacci calculator. All right, I'm going to leave the link on the video description. So what you do is you come to investing.com, you go to where it says technicals. Under technicals, go down to where it says Fibonacci calculator. Just click on that. Everything is going to be calculated for you. Remember, I showed you guys a scenario where if the market is in an uptrend, you see a pattern like this. You see A, B. The C level where you see the orange sign, this is where you have to get into that. This is where you have to jump into that particular trend, all right? So you buy at a pullback. It is this pullback level which the Fibonacci tool is going to help us to know that pullback level, or it is this pullback level that this particular Fibonacci calculator is just going to, it will just automatically just give us that particular figure for us to just go on our trading platform and we type in. As easy as that. So you can see our A is the first point. So if we have something like this, let's quickly go back here and we have something like this. So you see the market going like this, like this, like this, and like this, right? So here you can see, let's just quickly zoom out this one. So you can see this is our A. This is the most recent. Here is the most recent swing low, and here is the most recent swing high. So we want to be able to determine the level where we can jump into this particular trend. What are we going to do? We'll know that this is our A level, this is our B level, Then we don't know where the C level is going to be. We don't know the extent at which the market is going to retrace against us before the original trend will be resumed. That is why this particular tool will be able to help us to know the C level. That is why if you come here, you can see the A level, the B level, and the C level is what we don't know. All right. So what we just have to do is you go on your chart and you just read. You just come here. If the chart, if the price is here, you just hold your mouse somewhere here, and you can see by the right. You can read the price chart. You can just read your price chart, and you read the price, the current market price at that level, at the A level. You come on your tool and you just type on A. You just type in that particular data. You go back to your chart again. On the B level, which is the A level is the recent swing low in the market. The B level is the recent swing high, the most significant. Remember, if the market is the most significant swing low and the most significant swing high. So this one is the most significant swing high in the market, which is a B point. So I'll just come here and I'll just copy this price again, and I just come here at the B level and I just type in that price. That is all, and I click on calculate. So all the Fibonacci levels are going to display here, and we just copy the 38% data, the 38% figure and the 50% figure. That is all. That is where we're going to be buying. In an uptrend, that is where we're going to be buying. And then in a downtrend, we're just going to do the opposite. We're going to have our A, B, then the C is where we know the original downtrend is going to be resuming. And when we put all the data, this tool is going to tell us where the original downtrend is going to be resuming. So let's take a practical example, because last week or on Monday, I've taken almost about 5 trades with this strategy, and I'm happy I was able to record everything. So let me just quickly go on my MT5 on my. I took the trade on my MT5, but I would use Trading View to show you the examples so that I can use these particular tools, because I don't have these tools on MT5. So if I can just zoom in, let me look for that particular trade. I was able to mark it somewhere here. Good. So you can see here is a particular trade somewhere. Let me just quickly look for that particular trade. Let's also delete this. Good. So our chart is very clean now. Our chart is very, very clean. Very, very clean. So you can see the market is going down here. So let's start playing, and we look for the most significant. Now we are looking for the most significant swing low and swing high in the market to be able to look for where to jump into the trend. So let's start playing and see. Let's start playing. Okay. You can see this. So we are just looking for a recent swing low or swing high in the market. Good. I can start seeing something. I can see something. You can see here the trend changed here, and we started bouncing on lower low. Let me try to zoom this out. Let's try to zoom this on. Good. So we started bouncing here on higher lows, higher highs, higher lows, higher height. And the higher low here and higher height has given us our most recent swing high in the market. The most recent swing low is here. This is our most recent swing low somewhere here. And this is our most recent swing high somewhere here. So we're going to be, we don't know what level now. You can see the market is already falling against us. So we don't know what level we're going to be buying, because we want to be able to jump into the trend. We want to buy. So what do? We go back now to the Fibonacci calculator. We put in the data to be able to look for that level where we're going to buy. And 90% of the time, these levels are going to be respected. So the first A level is what? Is the first most significant swing low, which is this level. So you just put your mouse there and you read the figure which is there, which is 156.87. Let me read it again. 156.863. 156.863. So that is the first significant swing low. We come to the most significant swing high, which is 159.25. You come here, 159.25. 0.25 what? 159.252. 0.252. Good. So we already have our most recent swing low and our most recent swing high. So let's calculate all the levels. You can see, you just click on calculate and all the levels are already there. And what level are we expected to buy? We're expected to buy at the 38.2% level or the 50% level. So you can buy at any of these prices. So let's start with the first price. Let's start with the first price, which is the 38% level. So you just read the figure which is there. The figure which is there is 158.33. 158.33. So let's go to 158.33. Let's look for a horizontal line. Horizontal line. So let's put here 158.33 is somewhere here. 0.33, this is it here. Okay, that is the first level. That is the first level right there. Then let's look for the 50% level. The 50% level is going to be, the 50% level is 158.05. 158.05, let's come again. 158.05. Yes, good. So now we have our two levels, right? We have our 50% level, which is this one. We have our 38% level. And then where do we put our stop loss? Our stop loss has to go at the 76% level. So you are just copying these figures. You just copy these figures. Our stop loss is going to be at 157.42. 157.42. This is 157.42 is somewhere here. So let's put this line somewhere here. So that is where our stop loss is going to be. All right. Good. Now we already know this is our 38% level and our 50% level. So you can buy this particular market at any of this level, and this is where your stop loss is going to be. Your stop loss, if you want it to be too tight, you can put it at the 56, at the 78. You can put it at the 76% level, or you can put it between the 76 and the 100% level. So you can be flexible a little bit. Maybe you can put it just few pips down, maybe somewhere here. So your stop loss. So those are the levels. So long as you've already determined those levels, you are good to go. The only thing you are just waiting is for the market to get to any of these levels. If the market can get here, I'll buy here. As soon as you buy here, you put your stop loss here, and your take profit is 2 times your risk. So let's bring in our position calculator, and let's assume we were able to buy at the 50% level, which is here. Our stop loss is just somewhere here, and our take profit is a risk to reward of 1:2. So let's just stop here. This is 1:2. You can put 1:2, 1:2.5. It just depends on you. So let's even go with 1:2.5, right? Let's go 1:2.5. So if we are risking $100, we are going for $250. So let's play to see if we would have hit our take profit and how soon. You can see the market is still dropping. The market is still dropping. You can see. Can you see this? We are already in profit. Can you see this? We are already in profit. Can you see? Very soon we're going to be hitting our take profit. We are already in profit. We are already up of almost about 200 pips. Let's go. Boom. We just hit our take profit, and that is almost about $2,500 if you are risking $1,000. That is the first trade, and we are already done with the first trade. Can you see this? So that is how you are able to use this particular tool to place your trade without even coming here to start worrying. Okay, let's try now to bring in the Fibonacci tool like any other person would do, right? You'll be able to see that you have point of confluences. Let's just draw the Fibonacci tool from the most recent swing low to the most recent swing high, which is here. Can you see? Can you see this? Can you see this, guys? All the data is corresponding. The 38% level, if I have to zoom in somewhere here, you can see this is the 38% level, and it is corresponding to the line which we drew manually. So we were able to determine these levels manually without even using. So we understand what we are doing. So with or without this tool, we can still know where to enter into the market. We can still know where to place our trade, where to take our take profit, where to place our stop loss. You see, so you are not just gambling. You are not just trading because, okay, somebody just give you a signal and say you know what you are doing. Check. This is the line we drew for the 50% level. You can see it just corresponds. It gave us a point of confluence, and that is the same level the Fibonacci tool is going to give us. Can you see? So that is example. Let's just take another example again to see how we would have smashed our take profit, or how we would have used this particular strategy. So you can see this is a purely different currency pair. This currency pair is what? This is Euro USD. And on Euro USD, you can see here we had our first impulsive move. We had our first impulsive move from here to here. So we had our A level here, our B level somewhere here, and now we are looking for our C level. So we don't know where that C level is going to be, because we're going to be getting in at the C level, right? We don't know where it's going to be, and this tool is going to help us to be able to look for the C level. So let's just quickly use the same method to be able to see if we would have gotten a profit here or not. And remember, these are live trades that I took. That is why I was able to mark down everything so that I can show you guys. So good. The most recent swing low is here, which is 1.034, right? 1.0349. So we come here, we put here The A level is 1.0349. So good. Then the B level is here, the most recent significant swing low, and the most recent significant swing high is here, which is 1.0556. 1.0556. Let's just put another figure. Good. Now, so we have our A level and we have our B level right there. So let's just calculate now to see what level we're going to be buying, because we want to jump into this particular trend. We can see the market moving up, so we want to calculate and see what level we're going to be buying. Buy at the 38% level or the 50% or the 50% level, which the 50% level is 1.0453. 1.0453. So let's come back to our horizontal line and we mark out 1.0453. 453. Good. That is it. That is our horizontal line. So we have our 50% right here. This is our 50%. If we have to write here, that is 50%. No, that is 38%. Then here is our 50%. This is our 50% level. Our 50% level. Good. So we have our 38% level and our 50% level. And our stop loss, where is our stop loss going to go? Our stop loss is going to go at the 76% level, or you put it between the 76% level and the 100% level, which is 1.039. 1.039. Let's go back here. 1.039 is somewhere 039. This is it. So our stop loss is going to be somewhere here. So this is our stop loss. These are the two levels where we're going to be buying. So let's play the chart to see where we would have gotten into this particular trade. All right. Good, good. Okay, so you can see the market now. You can see the market is beginning to fall against us. Let's keep going. Let's go one candle at a time. Boom. So we just got triggered at the 38% level. So you can buy right here or wait for the market to hit your 50% level. You'll be able to know according to practice. But now let's just assume this one I bought with this particular trade. Even I have to go on my FS book. You see, I bought at the 38% level. Let's play and see. Let's play. You can see the market is already going against us, but this is our stop loss right here. And remember, our take profit is 2 times our stop loss. So let's come in with our position calculator. Our stop loss is right down here, and we are going for a risk to reward of 1:2 or 1:2.5. Okay, that is the risk to reward of 1:2. So let's play to see if we would have hit our stop loss or our take profit. Okay, you can see the market is still good. We are already in profit. The market tried to come back again to the 50% level, but didn't. You can see we are already in profit of almost about 300 pips, because this target is almost about 380 pips. Let's just keep going. Let's keep going. Let's keep going. Let's keep going. We just missed our take profit. We missed our take profit. We missed our take profit. Boom. Can you see this, guys? This was a longer than expected trade, but at the end of the day, you can see we just hit our take profit. This is our take profit level. And boom, we just smashed our take profit with almost about $3,040. So that is that about this strategy, guys. Even if now, let's continue going ahead, and I'll be able to show you guys when immediately this particular trend changed the direction, I was able to take another trade again. So that is how you can use this strategy to be able to make money from the Forex market. I have been using this strategy for a while now, and I thought, okay, it makes sense if I'm able to show my subscribers how you can be able to use these modifications to make money in Forex trading. If all the strategies on the internet, if all the generic strategies on the internet were working, then everyone would have been making money in Forex trading. The reason why only few people are making money in Forex trading, or the reason why only few people and us like us who are profitable in Forex trading, is because only few people are able to go an extra mile. So you see, we have been able to go an extra mile to even use tools that you won't see anywhere on the internet to look for point of confluences. The same level that particular tool is giving us, use the Fibonacci tool, and the Fibonacci tool will give you the same thing. But our own levels are even more accurate. They even tell you more where to put your stop loss. They tell you where to put your take profit. So if you've gotten some value from this particular video, then let me know by smashing the like button on the video. Let me know in the comment section what you think about this strategy. I always reply to all the comments on my video. Also, make sure you check out my free Discord community if you want to be able to join my free Discord server. If you want to learn Forex A to Z, then make sure you enroll in Godlove University. If you want to be able to learn more about the Fibonacci strategy, then check out this video. Also, check out this video, which is a live trade on the Fibonacci strategy. Click here to subscribe to the channel, and I will see you guys on these other videos. Peace.